Hey everyone, it's Zach with Palantir Research. The day of Q4 2023 earnings and full year 2023 has finally arrived. If you want clues on how the stock will react, then here's a quick earnings preview so you're prepared to start digging through earnings right away when they come out after market close today. So take the time to review last earnings to get you up to speed found on Palantir's investor relations website. So starting with GAAP profitability, as we know, last earnings was spectacularly their fourth quarter in a row of GAAP profitability, and third without the need for a stepped up basis to achieve this. So for me personally, the amount of time here is really more symbolic for me as long as it's positive. It'll be nice if this grows substantially from $71.5 million, but this is just gravy for me, honestly. The only way this metric would move the stock is if it goes very negative in that direction, which I highly doubt considering the emphasis from management that they put behind this. Now, next on the quick related note to GAAP operating income, which I pointed out with the stepped up basis before, they did not need to generate a GAAP income operationally starting in Q1 of 2023, where it's positive. So I'm expecting this to stay positive and over time as it grows substantially to show how scalable their solutions really are. My focus will grow on these GAAP income metrics over time after we first figure out growth on the top line, but it's always nice to see them stay on top of this and keep track of this and maintaining it for S&P eligibility. Now, revenue-wise, specifically in the United States first, U.S. commercial is the bright spot of growth, showing 33% year over year, while U.S. government is only 10%. So from my perspective, U.S. commercial needs to keep growing this fast or even faster. Of course, we know it's from a slightly smaller base still, but as it catches up to U.S. government, this will become increasingly more difficult and important, but truly show if growth is starting to supercharge. Now, on the government end, we've seen the recent articles from Wall Street Journal and from negative analyst reports commenting on slow government spending. So I'm not sure how this metric will be, but as long as it keeps growing and maintains itself for larger contracts down the pipeline, I know that the lumpiness can play a role here, so it may just be a few more quarters of small growth while we still are in this lull. Now, when we're including all revenue, so US and international, we can see how the commercial growth is not as crazy, so that indicates the need to try to break into international commercial markets. So we did see that recent Kohl's deal, and hopefully it symbolizes this turning around, and the government side still has low growth, maybe, but Palantir's management will give some more clues around NATO, the work with Israel, and possibly anything in new regions that we haven't heard about. And then we'll also see really quickly the total revenue growth of everything combined, so 17%. The hope here is that we start to see a turnaround in this year-over-year growth of the quarter. I wouldn't be surprised to see the stock take a hit if this continues to stagnate on Q4 2023's year-over-year revenue growth. Now, we know management has been talking up AIP boot camps, but actually translating to revenue is a different story here. We'll let the numbers speak for themselves when they're out. If we see a continued decline, this will definitely hurt the story of Palantir and the recent optimism. But it's still possible to continue and keep investors happy, even if this falls a little bit short, depending on the next metric, and that's customer count. I think a lot of eyes will be on the specific metric first and foremost because it will confirm to investors institutionally as well as retail alike, showing if these AIP boot camps are working. The beauty of this metric is that a small contract counts just as much as a big contract as long as the customer is new. So it's a leading metric, but that can make up for the revenue if these customer counts perform very, very well. But that's still a big if. Now, total customer count has grown by 34% year over year, and then quarter over quarter, you can see it's a slight stagnation here, but at least a turnaround from that 7% a few quarters ago. Now, if we can pop up over 500 in total customers, that'd be closer to a 10% quarter over quarter growth rate. I think that's the ideal case of performance and will truly be a number to actually point out to the growth, to point out to if growth is coming back, because a quarter over quarter growth would literally be turning around. Now, for commercial customer counts, when you break it out, we are seeing a similar story of that turnaround in quarter over quarter growth, as well as the massive 45% year over year growth. So be ready to compare these numbers first. Now, kind of a different proxy for revenue, although not one-to-one also, because deals can be over different terms or even with existing customers, but the 80 deals of at least $1 million during Q3. We want to just see this continue to grow even with other breakdowns of $5 million and $10 million deals. I think as long as the direction is positive, this is what investors would like to see. And then cash. This is big, of course. My weekly video did touch on this here and my thoughts in more detail, but either way, to keep the operational cash flow positive and the cash pile growing as well, I think investors will be fine with this. If Palantir continues to choose to start utilizing this cash, and as long as it doesn't look like they're wasting or spending their money and burning it on something dumb, then it's a no big deal here to keep it growing. I think there isn't any opportunity for management to mess this up, but who knows if they bring up something during the earnings call about certain investments or restructuring or anything to help boost their growth especially with AIP boot camps. And then the big kahuna here, guidance. On a quarterly and full year basis, GAAP net income I expect to keep with no need for any exact figures here. Now, for revenue, if we get something at or above 20%, then I think the market overall will be happy with that because it's a turnaround of the declining growth rate. And if we come in at around the same rates, though, we are now, say, 18 or 19%, even though it's a little bit higher. But obviously, if you put it lower than that, it's going to be worse. I think this would hurt or be looked down upon and hurt the stock's price because it further delays the vision that investors have been painted, which is growth is here and coming because AIP and the boot camps are working. And, changing management's expectations, if it's not happening, then what's the actual story here? Now, someone can always argue they're sandbagging it since Palantir typically just ekes out at or above their guidance consistently, but I'd rather hold them to the numbers here than just assuming of the sandbagging. So with management being comfortable with a certain number and it is good, then I think overall then that's going to help the stock. But thanks for watching, and I'll see you in the next video.